Joining me right now is a member of the House Homeland Security and Financial Services Committees, Congressman Peter King of New York. Congressman, good to see you. Thanks so much for joining us this morning.
Thank you, Maria.
Look, I know that the issue that you've had with this bill from the get-go is the fact that they're eliminating the so-called SALT deduction, that's state and local income deduction, which a lot of your constituents used. What are your priorities now with this bill, having passed the House, having passed the Senate, now they go into reconciliation?
Maria, I still intend to vote against it because that is such a key component as far as my district is concerned, as far as Long Island is concerned, and as far as New York is concerned. Listen, I support across-the-board tax cuts. I support the corporate tax cuts. I support repatriation. I think it's essential we do lower tax rates. However, to do it at the expense of basically New York, New Jersey, and California is a redistribution of wealth. And it's, as people in my district are going to be financing a tax cut for the rest of the country. We already get shortchanged on federal revenues by $48 billion every year. And other states get basically subsidized by us, and now they're using that against us. So anyway, listen, everything here is well-intentioned, but the way it was financed is, to me, just too much damage to, to my constituents.
You know, I'm wondering if people will see this bill later and get alienated by this because you are seeing a portion of the public see their taxes go up, Congressman. We know that, whether it's your state, New York, New Jersey, Connecticut, that elimination, California, 6 million people use that deduction in California. Those people, and now the Senate has not a full repeal of the AMT. So if you thought you were getting offset by the AMT going away, some people aren't. So I'm wondering if this is actually going to be hurtful on the individual side to the Republicans, given that you are going to see some people face higher taxes.
Well, there's no doubt there's going to be a number of people, especially in New York, New Jersey, and California, who are going to have their taxes go up, but also in other states, people who do have property tax issues. But those are the three states that are hurt the most. And to me, it's a redistribution of wealth. But also, the whole way this is being done, I'm not a big process person, but I know that the 1986 tax reform came after 2 years of hearings and negotiations. To be basically doing this in the middle of the night in the Senate, I think there's going to be a lot of unintended consequences that are being discovered over the next few months. And I'm not talking about people sneaking provisions in. I'm just saying that so many provisions here are interrelated, interconnected, and I don't know if all of the ramifications have been thought through. So that's a process issue that I think is going to unfold over the next several months, where we see, again, the unintended consequence.
I want to ask you about another angle on this, though, because I'm reading an article right now, Congressman, about Washington, constantly the states that are, sending more money in than they're getting back, like New York. You've made this point a lot. They're pointing out in this article that much of the money that these analysts count on flowing to the states does not come in the form of discretionary federal aid, but as payments that individuals have earned for contracts that Washington competitively awards. So an important category of so-called federal spending in the states is retirement benefits, 3/4 of which consist of Social Security payments, payments to veterans, retirement benefits, federal workers, disability payments. These are the largest classification of funds flowing to the states. So while you're sending in more money than you're getting back, what about all that benefit money that the states are getting?
Yeah, but again, that's be someplace where we draw the line here. And when you see a state like South Carolina, for instance, getting almost twice as much back as it puts in, and New York, we can say, we can talk about different benefits going different places, but the fact is, if you're looking at any kind of a rational barometer here, New York pays out a lot more money than it gets back. I mean, Senator Moynihan started doing this analysis years ago. And again, you can always find a chink in the armor here or there, or some kind of weakness here. But the bottom line is that there's no doubt that New York and New Jersey and California pay out a lot more than they get back.
Congressman, are you expecting an exodus out of New York? I mean, we had Don Peebles on, real estate developer, here several times, and he thinks as a result of this plan, people are going to move to low-tax states like Florida.
Oh, there's no doubt. Listen, that's already begun in New York, and I'm not here to defend everything New York does, but the fact is it's already begun, and it's going to really accelerate. From all estimates I've seen, it's going to accelerate dramatically. They call it the 183 Club, at the very least.
Right.
People are going to spend more than half their time in other states. Also, another factor is a number of economists I've spoken to expect the value of homes to decrease by 10 to 20% in places like New York, and for many people, their home is their only real asset. And to have that depreciate by 10 or 20% is, again, an added burden that they're going to bear from this tax bill.
Do you think as a result of your lobbying on this and your constant talking about this, you've really been out there? And I know that you're doing this for your constituents, especially as the Democrats are targeting your seat in 2018. Do you think you've moved the needle in terms of changing the conversation? I mean, will they come up with a middle ground in this bill that they're going to reconcile this week?
I think one bit of progress we made already was on the $10,000. Now, that's not enough, but I doubt if that would have been put in if we hadn't made as much noise as we did. And by the way, I was saying this long before my district was ever being targeted. I've been saying this basically since last January.
I know.
How wrong and unfair this is. I don't know if there's much more room for progress. Maybe something on the state income tax. They may do that if they're afraid of losing voters from votes from California, because California, they have more of an income tax issue than they do a property tax. So they may make some concessions to them to try to guarantee their votes in the House.
Yeah, but Congressman, you have to wonder if, in fact, at the end of the day, it is the right thing to do to force states to lower taxes or pull in spending. Because a lot of the governors that you're referring to, they hide behind this. They say, well, we're going to raise taxes on the millionaires, you know, because we can, because we know that they can deduct them. And now the fact that they're eliminating this deduction has these state legislators thinking twice. Look at Sweeney in New Jersey saying, OK, well, wait a second, maybe that millionaire's tax wasn't such a good idea after all. We're going to have to rethink everything.
Listen, some governors make this a hard case to argue, but to me, the principle of federalism is that conservatives have always said that local and state governments should pick up as much of the cost as they can rather than doing it at the federal level. So now we're being penalized for doing that. Are there excesses? Yes, there are. But to me, the principle still should be that you shouldn't be taxed twice, and that we should be encouraging local and state governments to do the spending rather than the federal government.
All right. You've had great leadership on this issue, Congressman. Thanks so much for joining us this morning.
Maria, thank you very much.
Congressman Peter King there.